From thetraderguy.com, this is Chris taking a look at a tip and trick that I use to trade various markets called trading the V. Now, trading the V in and of itself isn't unique. A lot of people look for a pullback and a bounce. However, there's a very specific way I do it that perhaps might help you, especially if you're newer, because it might keep you out of some trouble. Quite often you'll see the market take off in one direction and then pull back, and you never really know when to get involved. But I have devised a mechanical system that I use quite a bit that really has helped me through the years. In this chart, I have the US dollar against the Canadian dollar. You can see it has launched higher and then fell. On this fall, I become interested because one of two things is happening. Either you're going to be offered some value here, meaning cheap US dollars, or something's changed drastically. Most of the time, it's a matter of value. People have taken profit, whatever. So I like to pay attention to the support and resistance areas. And you can see that there clearly is one there. We plummet towards it and then we bounce. However, instead of just jumping in, which some traders will do, I will take the last, in this case, a negative candle for the V, and I will put my stop loss just on the other side of it. And then what I wait for is a candlestick close above it. Now, a lot of people will say, if the third candlestick, it's a 3-bar reversal is a lot of times what it's called, closes above it or breaks above it, you enter. I'm a little bit more cautious than that. What I want to see is a close above it. And right here, it's just shy. So you can see that, you may have wanted to jump the gun, but notice how the two candlesticks ahead of it have shown a lot of exhaustion. Keep in mind, when you look at this in the past, it's easy, but when you're looking at it in real time, you might have some questions because of the way this has behaved. So what I'll do is I'll wait for a candlestick close above it and then enter. So this is an hourly chart, and you can see your entry would be at this candlestick at the close, and your stop loss is below this candlestick here. It's a little bit more cautious way to trade, but in this case, it really only ended up being about 45, 47 pips. And you can see that we did take off to the upside. We pulled back a bit and then launched much further. You, of course, can do this in downtrends as well. It works the exact same way. So you can see that the British pound had fallen and had bounced. You had a little bit of one of those 3-bar reversals here, but the biggest problem is the candlestick on the right side of the V, in this case an upside down V, was ridiculous. You don't want to short here with a stop loss up here. There's no point in it. It'll bounce again. So you look for a bounce and you try to say, where could support or resistance be? And you can make an argument for right here. Whether it's major or minor is debatable, but you can see that there's been a reaction. We bounce, we get this candlestick here, and then we pull on the other side and start to fall. Now, this is where an abundance of caution comes into play. Some traders would just take this candlestick, and in this case, on that close, it would have been fine, and that's fine. Just recognize that it's a little bit more aggressive. A little bit more cautious way to trade would be to take it right here at this close. It's actually like a pip or two below that candlestick. So your stop loss is up here at 1.2668. Your entry is at 1.2613, and you can see we plummeted. You can also see that we have now formed the V again upside down. Now, the question is, how sloppy do you want to get with it? But you could perhaps make an argument here as well. Now, on this chart, it's the daily chart, so it's a little bit different animal in the sense that it takes a lot more to make it happen. So if you are a swing trader, if you're still working your 9-to-5 job and you can't trade all through the day, it works the same here. So notice the US dollar's been climbing against the Swiss franc for a while. And here's an area that's been support and resistance, and you can see we pulled right back to it. Now, yes, this did form a hammer. Some people would take that for the trade to begin with, and there's really nothing wrong with that. But I actually, in this case, would also pay attention to this candlestick here. And once we close above there, you could take the entry. It's a much bigger and wider scope, but obviously you would have a mechanical system and you are with the momentum. Another way that you can do this, and maybe a little riskier, is to take on the close of this candlestick, and that's because it's above the true body of the other side of the V. Again, that's a little bit more aggressive, but it is something that can be done for those of you who might want to get a little bit more ahead of the curve. Keep in mind, though, your win-loss ratio will suffer as a result. As the US dollar was falling against the Swiss franc, you can see that we bounced. We formed this V pattern right here at what was support is now resistance. This candlestick here was the beginning of the V. So as soon as you got a close below it on this candlestick, you would short. You would put your stop loss on the other side of the V and then just simply let it go. Now, as far as moving your stops as you go along, that is something that we'll get into in another video. I hope this at least gave you something to think about and something to contemplate when trading markets. This works in all markets. It's market agnostic. It works in all time frames. However, I'd be the first to tell you that on something like a 15-minute chart, it's not as reliable as on the daily chart or the weekly chart, obviously, because there's a lot more noise on the intraday charts. But do keep in mind that this was developed as I was day trading futures is when I started to use this. So you can make an argument for that as a little bit of inspiration. If you enjoyed the video, give me a thumbs up and make sure to subscribe to the channel as I plan on releasing a lot more of these.